Are you filled with FOMO so much that you can't even enjoy life? You know, those little simple things in life, like sitting in a cafe, having a cup of coffee, and just enjoying that. I want to introduce you to one of my new friends. This is Impatient Patty. Like many traders, Patty struggles with FOMO, the fear of missing out. Her impatience leads her to jump into trades without waiting for clear setups and triggers. And here she is sitting in her favorite sidewalk cafe, watching her latest FOMO trade crash through the bottom of her computer screen. I know I've been there, but what causes it? Is it something innate? Is it something we learn? We're going to take a look at that today. We're going to identify what steps she can take to overcome this hurdle and trade with discipline and patience. So stay tuned as we unravel the questions and guide you and Patty towards trading with confidence, not fear. How many of you have been challenged over the last few weeks? The market's running away from you and you feel like, oh, I'm losing out, I'm missing out. And that's absolutely normal, especially when the market is reaching an apex because there's so much excitement out there. And that excitement can suck you in to buying at the wrong time. So let's take a look at what's going on in the indexes. Let's take a look at the spiders. One of the things that Patty always struggles with is she looks at the charts and she thinks, oh, if I would have only got in back here, look at what I could have done. If you're looking to the left with 2020 hindsight, as Mark Minervini says, that hindsight is merely an illusion of what could have been. And don't get stuck in the, oh, if I would have only. The real thing is focus on the process right now. I can only trade the chart that's in front of me. I can't bounce back to beginning of 2024 to start trading. So interesting thing going on here in the S&P and the spiders. We're getting a really nice bearish engulfing of a hanging man. So that's kind of a double whammy negative bearish reversal signal. We have on the weekly chart, it's not a bearish engulfing, it's almost a bearish harami. However, that's an outside week. Oftentimes after a move up, an outside move is an indicator. It's kind of like a cousin of the bearish engulfing. And so that is something to say, okay, it's also getting a little bit extended in its momentum. Momentum is quite high, higher than it has been in several of the areas in the past. And we could say it could be time for a pullback. If you remember from a couple of weeks ago, I drew in this line here, the 514 level. That was a Fibonacci extension. That was my upside target. And sure enough, it gets all the way up there, sticks its nose. It did a Pinocchio action there, sticks its nose above the line, and now is falling back. The positives on this is that it is still above its 8-day moving average. It is still above its 20-day moving average. And so in order for this to really make a strong correction to the downside, let's see, to even get back down to the 50, it's going to have to bend those moving averages over, break down, may even get across, and our momentum may in fact cross to the bottom side. Use your momentum indicators here. Here's the upper momentum. Okay, if it breaks out the top, that means we're going back up. However, if we break out of this little level down here, and I hope you've seen that before, break out of this level down here, that's a pretty good indication that the momentum is shifting and the structure is shifting on momentum. So that's what we've got going on with the spiders. Let's jump over here to the Russell IWM. So similar type situation. We're getting a big outside day on IWM. The markets originally this morning took off hard. As you see here, a big outside day may wind up as a bearish engulfing. Again, draw a line across these lows here. That's what I like about utilizing the TSI. But I am doing some work on the RSI to start including that in future sessions. But if that structure breaks and that structure breaks, that's in telling us that the uptrend is now at least temporarily stalled and falling. Almost a shooting star on the weekly candlestick. And if this was a breakout area right there, so a pullback to that breakout would not be surprising. How far of a drop would that be from the high? That would be approximately about a 5% drop. So it wouldn't be surprising to see that happen. What about the NASDAQ? The NASDAQ, everybody's favorite. We'll look at the Qs to represent the NASDAQ. Okay. If you can remember last week, I drew this little triangle up here to give an idea of when the Qs could be reversing. And I've got also a Fibonacci extension here at $450.72. We approached it. The lesson to be learned here is while we identify specific lines in the sand, that line in the sand of 450.72 is actually just the middle of a zone. And the middle of the zone, we got up to 448. So it was like $2 away from hitting that level. So just keep that in mind as you're measuring out what's going on here. So bearish engulfing, possible break and close below the 8. If that happens, look for it to drive lower into the uptrend line. There's several places of levels of support: the 20-day moving average, the uptrend line, the 34, the 50. All of those could be the place where this bounces from. On the weekly chart, what am I looking at? Looks like a little bit of a dark cloud cover. So 2 bearish signals. That's not 2 BS. That's 2 bearish signals. Got it? Hey, if you're wondering how impatient Patty gets out of her FOMO and impatient trading, well, we're going to jump into that in today's face-to-face. Did you know that impatience in trading is tied very closely to impulsive and compulsive decision making? I know this was a huge, large issue for me when I first got started. Today, I'm going to be covering the aspect of FOMO and how do you design yourself up out of the issue of FOMO. I urge you, stop wasting time fretting, going, oh my gosh, it's never going to come back to where I want to buy it. Stop it. I don't know if you've ever seen that skit by Bob Newhart, where he's a psychologist and the clients would come to see him and they would explain all their issues and all that kind of stuff. And he goes, well, there's a very simple solution to that. And he would just say,
stop it. STOP, new word, IT.
Stop it. And he says, pay the receptionist on your way out. So that's one of those things. Teach yourself to stop it. Okay.
So that will be $3.
One of the biggest ways that you can solve the issue of FOMO is to develop a trading plan and then stick with the trading plan. And that can sometimes be challenging because the trading plan is going to tell you to stay out and when you want to get in so badly. Secondly, practice mindfulness and patience. What does that include? Designing your trading plan, what you will do during the lulls in the market, because through the years, there are going to be times every year where setups just aren't happening. So what are you going to do during those times? I know what I do. I basically work on refining my system. I look at new ways of doing things and I practice my simulated trading. So when the setup happens, I recognize it and I take action. Number 3, use your trade journal to talk to yourself and say, hey, I'm feeling FOMO about this. I don't know why, but talk it out. Speak it out, saying, I really want to get into XYZ company because I think it's a long term, it's a good buy. But, think about things like Enron. Did you know in 2001, even Forbes magazine was saying Enron is a good buy? And several months after that, it was goodbye because it crashed. Those of you who are familiar with Enron. And then set realistic goals for yourself. What are realistic goals? Basically, They are small, achievable goals you can do on a weekly basis. Start your day off in your journal saying, this is what I'm going to do today. Here's the one big rock in trading that I want to move. And it may be I'm going to trim and slim down my watch list because I've got some of the stocks on it just are pieces of crap. I need to get rid of them. I can stop watching them and stop wasting your time. Implement a decision-making process. And that's one of the things we do with autopilot trading is all our decisions on our trades are made during non-market hours, and our orders are put in during non-market hours so that in reality, instead of sitting there at that cafe watching your price of your last trade crash to the bottom of your computer screen, you can sit there and enjoy a croissant and a nice cup of coffee. Wow, what a change. That relieves a lot of pain. If you want to know how autopilot trading works, you can check out my book, Trade Your Way to Freedom, Retire Sooner with More Money and Less Fear. I have all my secrets there down in the description, and I will put a link to everything. If you found today's insights valuable, please consider exploring further into the other trading tips we have over on Market channel for solid trading tips and also ancient trader wisdom. All materials presented are for training purposes only. Traders should always paper trade any new method prior to the risk of their own personal capital. Remember, past performance is not an indication or promise of future performance.